Bismillahirrahmanirrahim. In this video, we will provide a comprehensive overview of transactions involving the purchase and sale of goods. I extend special thanks to Shahad Al Harbi, an alumna of Yambu Industrial College and currently with Saudi HEPCO, for requesting a detailed discussion on debit and credit notes. I also encourage my subscribers and viewers to express their interest in future videos covering topics related to accounting and finance. Throughout this presentation, we will delve into intricacies of debit and credit notes, addressing the reasons and circumstances under which they are issued. Specifically, we will examine scenarios where suppliers issue debit or credit notes and discuss the implications for tax accounts resulting from these transactions. Please like, subscribe, and share my channel to search for accounting lessons and hit the notification bell button to alert you for the latest video. For all of your questions, comments, and suggestions, please put them in the comment section below. And for webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Accounting is a K. We hope that this video helps students in their academic development and teachers in enhancing their lesson plans and teaching methodologies. An accountant will only record transactions that are substantiated by the corresponding voucher. This principle adheres to the fundamental rule of accounting: no entry without voucher. When a company makes a purchase, the seller issues a sales invoice. Transactions conducted by the company without proper vouchers are not recorded by the accountant. This ensures all purchases and sales are accurately documented and accounted for in the company's financial records. So let's begin by recording some basic sales transactions, starting with the simplest example. ABC company sold goods for cash 5,000 to XYZ company. So cash is debit and sales is credit. Now we can use revenue also depending upon the accounting policy of the firm, obviously. Then ABC company sold goods on account for 3,000 and they are selling on account. So XYZ company is debit and sales is credit. You can note that we have recorded here XYZ company and not accounts receivable, as we generally do in the initial accounting courses. However, there may be situations where rectifications are required. So, after executing a sales, various adjustments may become necessary because of sales returns, post-sales discounts, rate differences, or corrections in amounts. So, these adjustments require rectification within the sales record, adhering to the principle that no rectification can occur without proper documentation. In this context, the documentation required for such correction is known as a debit note or credit note. These notes serve as official vouchers that facilitate accurate recording and adjustment of sales related transactions in accordance with established accounting standards. So, debit or credit notes are issued to settle the past transactions. The next question pertains to the responsibilities for issuing debit or credit notes and the specific circumstances or transactions that warrant their issuance. So let's begin by discussing the responsible party for issuing a debit or credit note in the context of sales. According to the principle governing such transactions, the entity that originally created the sales vouchers is obligated to issue the corresponding debit or credit note. Therefore, in the case of sales, the seller is responsible for issuing the debit or credit note. Consequently, in the context of sales, ABC company would be the entity issuing the debit or credit note. If the seller fails to issue the necessary note, the purchaser has the authority to issue it instead. So, in our example, if ABC company does not issue the required note to rectify the sales, the purchaser XYZ company can issue the note accordingly. Therefore, in sales transactions, the primary responsibility to issue a debit or credit note lies with the seller. So, let us look into some rectification entries after the sales transaction. So, ABC company has sold 1000 kg of material to XYZ company at the rate of 10 per kg with tax charges amounting to 1250. So, XYZ company is debit, sales is credit, and tax is credit. So, sales transaction is executed now, and we have recorded it as well. And we are going to post it in the ledger. So, we have the XYZ account. You can see we have debited 11,250. The sales is credited by 10,000, and the taxes are credited by 1,250. So, having recorded the sales transaction, several future events could potentially influence its accounting treatment. These events include sales returns, post sales discounts, adjustments for exchange rate variances, or corrections to recorded amounts. So, each of these scenarios may require adjustments to the initial sales transaction between ABC company and XYZ company. In the event of sales return, the accountant will reverse the initial sales journal entry to correct the recorded sales. So we have, this is the initial sales journal entry, and if there is a sales return, you can see that this transaction is reversed. You can see XYZ company is credit, sales and tax are debit now. The reason being that the sales is going to reduce, and if the sales is going to reduce, the receivables are going to reduce, and so will be the tax burden as well. So in this case, you can see that if they are returning the goods, sales is debit to reduce our sales, and tax is also debit to reduce our tax burden. But by the amount of sales return, 1000 times 10, you can see that they have paid 1250 for taxes for 1000 kg, that means 1.25 per kg, and since we are returning 100 kg of these items, so that makes 125. So just make a note that this adjustment is referred to as a credit note, as the accountant has credited XYZ company. Then XYZ company pays the balance amount. So our bank balance will increase, and XYZ company account is going to be credited by the amount due to them. You can see XYZ was supposed to pay 11,250, but they have returned goods for 1,125. So the balance amount payable is 10,125, and that is what they have paid. And obviously our bank balance increases by the same amount. Now, in the second scenario, this is the first scenario, we look into the second scenario, post sales discount. So in the second scenario, suppose ABC company sells goods to XYZ company um, um, with a sales discount of 1000. So the treatment of the transaction remains the same regardless of whether there is a subsequent sales return or there is a discount. And the reason is that in both the cases, that is post sales discount or in the case of a sales return, in either case the sales account is going to decrease, and when it is going to decrease, we have simply reversed the initial journal entry. So you can see that when there is a sales discount of 1000, we have to reduce our sales by 1000. The tax burden is going to be debit by 125, and XYZ company is going to be credited by 1125. Then they are going to settle the amount, and that's how you can see that this is the balance that is to be paid by XYZ company. So XYZ company is credited by 10,125, and our bank balance once again increases by 10,125. So I would also like to emphasize over here that although the financial transaction for sales return as well as for the sales discount are identical, there is no change. However, there is a distinct impact on the inventory. When there is a sales return will affect the inventory, whereas the sales discount do not affect the inventory. So let us now consider the third scenario. If rectification is necessary due to an incorrect rate applied or an error in the invoice amount. So two possible situations can arise. First, there may be a requirement to reduce the sales amount, such as when the suppose the incorrect higher rate was applied, necessitating the difference in the sales figure. It is important to note that the transactions in this regard will be the same as for the post sales discount or it is for the sales return. So I am not going to repeat this scenario again. Let us go further. And there may also be a need to increase the sales amount, and we will talk about it now. So in this case, suppose the accountant has erroneously applied a lower rate to calculate the total sales. You can see ABC company accountant realized that there is an error in the rate and it should be 11 and not 10 per kg. So in such instances, the rectification entry would mirror the initial journal entry. You can see we are not reversing, it is simply a mirror image with a change in the values over here. So if there is a there is a rate difference, so I think this there is a mistake over here. So if there is a change, so XYZ company will be debit. So you can see that it should be 11. So the sales will be credit by 1, because the difference is 10 times 1, that is 1 times 1000 kg, that is 1000 how many 1000 10 per kg. So that is going to be 1000, and the taxes are going to be credit by 125, and XYZ company will be debit by 1125. So that's how this journal entry will be. Let me make it much cleaner. So XYZ company will be debit. We will record the amount in a minute. Sales will be 1 times 1000, the difference, that is 1000. And taxes are also going to increase by how much? By 125. So that is one. And then this amount for will be debited by 1125. So we have 11,250. The debit amount is 100,125. The sales you can see is 10,000 and plus 1, that is 11,000. The tax burden now has increased 1,250 and 125, and the bank is going to pay the amount. So the amount payable will be how much? 12,375. So bank account is debit and XYZ account will be credit by 12,375. So now in this case the adjustment is going to be referred as a debit note and not a credit note. And let me explain you the reason. The reason is, in this case, the company has debited the company XYZ. If you can remember, in the previous cases we have credited XYZ company. So when we are crediting XYZ company, it is a credit note, and when we are debiting the company, it is a debit note in case of sales. Next, let us see how we are going to talk about purchases, and let us see some basic purchase transactions, starting with the simplest of those. So ABC company purchased goods for 5,000 to XYZ company. So purchase is debit and cash is credit. In the second one, ABC company purchased goods on account for 3,000. So purchase is debit, and please note we don't record now as accounts payable but rather XYZ, because accounts payable is what you may be doing in your initial accounting courses. So similarly, as it was in the case of sales, upon completing a purchase transaction, various adjustments may be necessary, such as handling purchase returns, applying discounts post purchase, addressing rate differences, or correcting any discrepancies in the purchase amount. So these adjustments can only be accurately documented and rectified once again through proper documentation known as a debit note or credit note. As already stated, these documents serve as essential vouchers that ensure the precise recording and adjustment of purchase related transactions in compliance with established accounting principles. In the context of purchases, the responsibility of issuing a debit or credit note rests with the supplier, subject to specific conditions. Therefore, in the case of purchase made by ABC company, XYZ company would be required to issue the debit or credit note if any of these events occur. If the supplier fails to issue the necessary debit or credit note for any purchase adjustments, the buyer reserves the right to issue it instead. In our example, if XYZ company does not issue the required note for the purchase rectification, ABC company can issue the note accordingly. So let us look into some rectification entries after the purchase transaction. So let us first of all look into the purchase transaction. ABC company purchased 1000 kg of material. We are using the same transaction. The difference is this was related with sales and these are related with purchase. with tax charges of 1250. Now this is a purchase, and you can see that the sales journal entry is reversed. Now over here you can see purchase is debit, taxes are debit, and XYZ company is credit by this amount. And then when we are going to record this in the, you can see that 10,000 debit is in the purchase, 1,250 is for the taxes in the debit, and then XYZ company is credit by 11,250. Now, having recorded the purchase transaction, several future events could potentially influence its accounting treatments. Now, these events can include purchase returns, post-purchase discounts, adjustments for exchange rate variances, or corrections to recorded amounts. So, each of these scenarios may require adjustments to the initial purchase transactions between ABC company and XYZ company. Now, the company returns 100 kg of defective material, and in the event of purchase return, the accountant is going to reverse the initial purchase journal entry to correct the recorded purchase. And you can see here now XYZ company is debit and purchase and taxes are credit to reduce the purchase amount and the tax liability. The now so um, An intriguing consideration arises regarding whether a debit note or a credit note should be issued for the purchase return. It's crucial to remember that the primary responsibility for issuing a debit or credit note rests with the seller. So XYZ company, who initially issued the sales voucher, therefore it is the XYZ company that will issue a credit note rather than the debit note over here in this case. You can recall that in the case of sales return, um, by the ABC company, the seller ABC company issued a credit note. So this practice underscores the standard protocol whether the issuer of the initial transaction document assumes responsibility for issuing a credit note in scenario involving the returns. So this is going to be a credit note, and now um, let us see how we are going to record it. So there was a purchase return, we have reversed it, and then they have settled the transaction. So the journal entry, you can see purchase is debit by 10,000, taxes by 1250, XYZ company is credit by 11,250. Then XYZ company is debit for purchase return, and then purchases are credit by 1000 and taxes are credit by 125, and the balance amount is paid to XYZ company. So now you can see XYZ company is debit and bank is credit in the you can just simply see how the things happen when we do the purchase and when we have the sales. So you can have a comparison between the two. Then let us look into the second scenario. And in the second scenario, ABC company purchases goods from XYZ company with a purchase discount. So the treatment of the transaction once again remains same regardless of whether there is a subsequent purchase return or discount. In both the cases, that is the purchase account is going to be decreased. You can see over here the purchase has decreased by 1000, and here also when there is a purchase discount it is going to decrease, the purchase is going to decrease. So there is no change as far as the recording of the transactions are concerned, whether it is a purchase return or whether it is a purchase discount. So once again we keep the same initial purchase journal entry. Purchase is debit, taxes are debit, and XYZ company is credit. And now the company is allowing a discount of 1000. So so as they are giving a discount, there is a decrease in the purchase. That means this journal entry is going to be reversed. You can see now XYZ is debit, purchase and tax are credit, and this is the total for purchase and tax. Uh, However, I would also once again I would like to emphasize that the financial transaction for purchase return and purchase discount are identical. There is no change. However, there is a distinct impact on the inventory. Purchase return affect the inventory while purchase discount do not affect the inventory. And that's how our T accounts are going to look like. Let us consider the third scenario, uh, that is, if rectification is necessary due to an incorrect rate applied or an error in the invoice amount. Once again, two possible situations can arise. First, there may be a requirement to reduce the purchase amount, such as when an incorrect higher rate was applied, necessitating a decrease in the purchase figure. And if there is a decrease in the purchase figure, once again it will be the same transaction as it was in the case of purchase return or in the case of purchase discounts. So I am not going to repeat this scenario, but then there may be a need to increase the purchase amount, such as when an accountant has erroneously applied a lower rate to calculate the total purchase. So in such instances, the rectification entry would mirror the initial journal entry for purchase. Now don't forget, I am using the word mirror, and the simple reason is um, uh, the journal entry for rectification will be the same, as now the purchase has to increase. But before we go into it, I am going to make the correction over here. There is an error, I am sorry for that. The journal entry is going to be something like this. uh, XYZ company will be debit, and sales and tax are going to be credit by 1125, and this amount will be 1125, and that's why this amount is recorded as over here. And taxes are 1250 plus 125. This is for the sales. There was a mistake over here, I think. Sales return, there was a mistake in this transaction and I have made the correction over here. So I have simply copied it down over here, nothing else. Okay. So so if the purchase are going to increase, in this case obviously the rectification journal entry is going to be the mirror image of the initial journal entry, that is purchase is debit, tax is debit, and XYZ is credit, because the amount should be 11, and if it is 11, and so the difference of one in purchase has to be increased by $1 or 1 real times the total kg, that is 1000. So 1 times 1000 is 1000. And then there we have the tax increase of 125, and XYZ company is going to be credited by 1125. And then they are settling the account. So first of all, let us see how we are going to record the journal entries. These journal entries, we have purchase for 10,000, taxes are 1250. They are debit by 1250. XYZ company is 11 credit by 11,250. Now purchase is debit by 1000, and once again taxes are going to be debit by 125. So the tax burden is going to increase, obviously, because the purchase is increasing. And then we have XYZ company credit by 1125. And then if you look into the amount is going to be paid, and the total amount payable is going to be um, 12,375, and that is what we have paid over here. So, but I would like to emphasize at this time that now the adjustment will be referred to as a debit note and not a credit note, because there is an increase in purchase. So we can summarize that if purchase value decreases, the seller will issue a credit note, and if purchase value increases, the seller will issue a debit note. So this completes the video on debit and credit note. I hope you have enjoyed this presentation, and if you found value in this video, then please like, subscribe and share my channel, and hit the notification bell button to alert you for the latest video. For webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Remember, effective questioning brings insight, which fuels curiosity, which cultivates wisdom. If you have any question or any suggestion regarding this session, then please put them in the comment box below or by email, and inshallah I will reply you back. Thank you so much and happy learning.